Hi guys, welcome to Gold Price Daily Analysis. Today is Tuesday, 26th of March 2019. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. We will start our core analysis as usual after a quick recap. Actually, unlike usual, we haven't been waiting for data to be released. Actually, there was a lack of fundamentals for last session on Monday, but we have noticed a sell-off in the equities all around the world, mainly in Nasdaq, Dow Jones, and S&P. As a strategy recap, we said to you in the last episode, stay in the buy side. Any drop in the gold price to be considered as opportunity for buyers as long as the gold is still trading above 1,300. And actually the gold price dropped today to 1,310. It was a good opportunity to enter the market. For a Tuesday, the economic calendar, we are looking for the following headers from German. We are waiting for the GfK German consumer climate for April with medium importance, and that's all from German. Moving on to France, we are looking for the France GDP quarter to quarter and French GDP year to year with medium importance. Moving on to the United States, we are looking for the building permits for February and the housing starts for February and the CB consumer confidence for March. Three of them are important to be considered as market movers. That's all for the economic calendar. We'll move on to the technical analysis. On the last trading session on Monday, we got a trading range from 1,311 to 1,324. Numbers are rounded and market is still open. We expect the gold to close above 1,320 to 1,323. Moving averages located are for the 20 days 1,301, for the 50 days 1,310, for the 100 days is 1,280, and for the 200 days at 1,242. What matters for us that we are trading above the daily simple moving averages. Moving on to the RSI readings for the 1 hour 77 in the favor of the bulls, but notice that it's overbought and expect a drop in the gold price. For the 4 hours, it's 70 in the favor of the bulls, and it's approaching the overbought territory. And for the 1 day, it's 60 in the favor of the bulls. For the supports and resistance, we're having the supports at 1,320, followed by 1,316 and 1,312. For the resistance are located at 1,328, then 1,332, and 1,336. That's all for technical analysis. We're moving on to the trading strategy. For the trading strategy, the trend is bullish, extremely bullish, and the price action is positive. We are above the daily moving averages, all of them, and we do expect the US dollar to stay in range. Before moving on to the advice, we are going to do some market sentiment analysis by revising some main issues took place the last week. On last Wednesday, we got the FOMC statement, which was dovish negative, and the market now is on the understanding that there will be a rate increase this year, or maybe there will be a rate cut. And on last Friday, we got the PMI released from the major countries in the Euro area and the United States. The data was less than forecasts, okay, and it's pointing clearly for an economic slowdown. For the first time since the financial crisis in 2008, we got an inverted yield curve, which means that the yield on the 3 months treasury bills is higher than the yield on the 10 years treasury notes. The last one, which is the inverted yield curve, usually happens before a recession, so it's a very bad signal. Okay, so now all the eyes on the GDP to be released on Thursday. The expectation is 2.4 and the last record was 2.6. Anything below this, okay, is going to be a crisis for the market and good for the gold. For the gold, stay on the buy side and don't short it for some few dollars, okay, and try to find the proper entry between 1315 to 1320. And don't worry, gold is not going to be dumped before the GDP is released. That's all for today. Please share, like, and subscribe, and I'll see you tomorrow.